Elon Musk's Tesla Inc. is sparking concerns around job security.
This is not financial advice, silly.
Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. Turned up to work and went to start my day. Was barely late, like 9:08. So took my coffee break. Then I got hungry, so I just stopped by the free buffet. But then to my dismay, I heard somebody say, "Attention humans, you have lost, you have not met your quota. Pack your belongings in a box, now it's over." Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. But I'm in management. I work hard every day. I need these benefits, health and 401k. How could they do this shit though? Where will I trade my crypto? I had a second monitor for Twitter. Where will it go? Somebody please stop the bus. I mean, not the fuss, but there's lots of us. And now you say you won't pay me to play ping pong because Optimus. I mean, who employs a damn humanoid? Some new droid for you to exploit, deploy to destroy your human droid. No lunch breaks, great, get a few deployed. Your time is up, human inferior to me. I'll take it from here, get relieved of your duty. Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. It's okay, human, please don't cry. You can always go and become a Twitter thread guy. Make pretty pictures with Midjourney on your new PC. Or make some YouTube videos about ChatGPT. Sucker. Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. Robot just stole my job. I'm there like, oh my god. I blame it on Elon. He's taking all I got. I mean, I didn't even write these songs. I just used ChatGPT because it's way easier. Holy shit. We're so...
Closing bell market zone time, CNBC.
Robot just stole my job.
Yo, yo, yo. Hello, everybody. I like to start with that intro because I don't think people realize how real this is about robots getting ready to steal all your jobs. They'll be stealing mine soon enough. Anyway, today was a good day. I think I ended up about 20,000 plus, 35,000 up actually in Tesla calls today, including my other account. Maybe that's like 38. So Tesla continues to be the gift that keeps on giving, and honestly, it's probably over 40 because I did cash out. I think it was 90,000 in Tesla calls today, roughly between all of this. Bought CleanSpark, bought Tesla stock, actually a decent amount of it. Bought BITX, it's leveraged, a 2x leverage play for Bitcoin, and then some PayPal calls as well. So, and some ETH in here too. And I think actually I might have had a couple more trades. Let me see what else. Where did I stop? CleanSpark. Let me just, might not have got a post out in time. So let me just check and see. Yeah, I bought more. I bought more Tesla too on top of that after selling 3 more contracts in Tesla calls. So I have, people have been asking, they're like, people were commenting in here like, whoa, I didn't know you were so all in on Tesla. I'm trying to sell it as quickly as I can. I can't help if it's still 39% of my portfolio. It just keeps fucking going up higher. Up right now, I think 285% maybe as we near the close. So I'm selling it as I go. But again, I sold 90 grand today. I was able to put that into a lot of other things, diversifying my risk. And at the same time, I should have, I believe I've cashed out all of my original contribution that got me this Tesla position. So with that, it's all the house's money right now. And even with this 39%, and you know what's crazy about this is 2 weeks ago it was 22. So I mean, it's made up a lot since then, even with me funneling money away from it into these other causes. So good times are being had. I'm excited about where the portfolio's at and where it might be going. So next, we're gonna hit U.S. economy and just kind of the big macro picture. Go through that, and then after we get through that, we'll go over into Bitcoin like we usually do, and then also too, we'll talk about Tesla and then other stocks and investments, and then I'll be answering any questions that you guys have. Robots just stole my job as fire. I agree. Disease Kodak, I think it is too. All right, so let's start off here. So Jeffrey Hirsch, he said NASDAQ mid-yearly rally up 5% already, official and approaching, but could persist modestly longer since July has best NASDAQ and S&P months for the last 21 years. Yeah, July is a great month. We know that. And then we know that the NASDAQ has greatly outperformed, but the S&P 500 is outperforming as well, and so is the Russell 1000, which is kind of interesting, right? Now we are still seeing problems in the 2000s. So again, some of the small caps are still getting, underperforming. But it's interesting that the Dow Jones is in line, and even all the way up to the Russell 1000 is outperforming by, roughly 2% versus the mean. So I think that shows my case, which is that we're going to see more of a broadening in the markets. Real quick, too, Kobayashi letter. He could be a little bit of a bear, but pretty good stuff, most of all. I think he provides great content. But he was just showing what we believe we're going to be seeing for CPI, which I think is coming tomorrow. I'll double check here in a second. For both core and headline from a lot of the major analysts that are out there. So you can kind of see where we're going to be lying, and that's what we'll be checking tomorrow morning, too, as those numbers come out. And let me just confirm that is, yeah, so see, here's the data that's coming out for tomorrow. We didn't really have much today. Mortgage data, it's weak. Who knew? Fed Chair Powell testimony, I spoke a little bit to it earlier. Nothing too shocking within it. If anything, I think it indicated more easing sooner, like September, without committing to it. We also had wholesale inventories, and I did a post about this, just looking at this number as well, and we're actually kind of ticking up here. We did pretty good for the wholesale number this last quarter and popped up, to 0.6%. And if we look back here at 2008, you can see that we're not near this precipitous drop that we saw back then. If anything, we've been in the trough. So it's really trying to figure out now. So are some of these retailers, are they stocking up because they believe they need to have the stock, and are they going to end up being right? So it's going to take a while for all this to play out. It's a good thing to watch, but I think right now it doesn't indicate anything bearish at all. If anything, it was more of a positive. But again, going to tomorrow, and let me just switch this. I'm going to switch this to level 2 impact because it's just cleaner. So tomorrow, we got core inflation data, we got regular inflation, CPI, jobless claims. It's going to be a fun day. And then Friday will be PPI. So depending upon where inflation, both within core, regular, and producer price index, wherever that's sitting, if we see these numbers deflating more and getting weaker, I think it increases the odds that the Fed is going to cut rates, and that should be a positive for markets. I don't see a different narrative spinning up from this, so I'm very excited to see what happens over the next 2 days, see if that leads to a continuation of what we're seeing within the market. And boy, has it been an interesting market. Let me just jump to the S&P. So this is kind of a big deal for a couple of reasons. One, anybody who is becoming more familiar with charts from spending time with me will know that my strike price for the S&P is up in this range, in the 6,000 range. That's kind of what I'm looking at for target, with an overshoot to 6,500 potentially. I'm starting to think that's possible. But anyway, my point is, at the .618, this is the golden retracement zone. It's like the most likely place where you end up taking a pause. So we'll definitely need some positive things and a positive narrative to continue to be able to just bust above this. So the only reason I'm bringing this up today, I sold a little bit of my Tesla calls today. I think it was like 15 contracts, which is a decent amount. That's about 9% of what I had left. So 9%? I don't know. My math's a little fuzzy right now. Maybe it's 8. Whatever. But it was a decent chunk, and I did that because I wanted to. I just wanted to respect this .618 golden retracement with everything else I'm seeing right now. I wanted to make sure. Oh, my viewer count isn't updating. Give me 1 second. OBS is great, but I wish I had like a person to do all this stuff. There we go. Now we got people. Yay. But yeah, so I wanted to respect the fact that we could be taking a pause here, and the fact that with Tesla, which I'll jump into a little bit here too. Tesla is extended on the RSI like in the 70s on the weekly time frame. So this is a high level, right? Like, don't get me wrong, it can go hella higher. We can get up into the 80s pretty easily if you go back here historically when we're in fervor. We can get up into the 90s. And if you weren't selling at 94 on the weekly time frame back in February of 2020, you were being pretty stupid and ignoring all technicals that the markets were screaming at you to sell. But the point being is we could see a pause here, or we could see this thing run higher, maybe get up into the 70s, 80s. But I do think there's the ability to pause, and I don't think it's a bad idea. I'm probably at 22% out, maybe 23% out of my Tesla position. I've at least paid for the entirety of it, or I'm very close to it. So I'm playing with the house's money now on all the money that I have sitting in that account, and that's the place I want to be right now. You know, I think there's like 1.2 million or 1.15 million sitting in Tesla, and I like that place. That doesn't bother me a bit. But my whole point here too is that with that RSI overextended, we could see some drag. We could just see, because again, we just broke out of a 2.5+ year time frame, right? That we've been struggling against, going back to the high back in, what was it, October of 2021, quite a few years ago, right? Almost 3 years ago when we had this high. And we've been in the struggle bus, and we just broke above it. Now, with the narratives being positive in the next 3+ weeks before 8.8, maybe we just keep rocking and rolling. Again, if CPI is good, if the producer price index is really good, I'd love to see that one really be good. Then we could see a more positive narrative, and it could cause us, the S&P, to keep screaming higher, despite the fact that it wants to stop at that golden retracement zone. It could maybe push this higher. But right now, I'd say it's like a coin flip. I don't know which direction we're going in. So it never hurts to literally be playing with the house's money and have all yours back. So that's a stance I'll always hold. And again, I don't sell too early. I'm up almost 300% on some of these calls, guys. So for the people who always like to go like, why are you selling? There's always people like, why are you selling? Or why aren't you selling? It's one or the other. But there's reasoning behind it. I'm trying to have a balanced approach. I won't be like 100% in and 100% out. It's just not the way I work. It's not good risk management. And I like to believe that I am a good risk manager. Anyway, what else is notable on here? I did add BITX, that 2x leverage fund, onto here. You can see SoFi dropped out because I had less than 1%. It takes $30,000 to get to 1% right now with the portfolio, because I'm at about 3 million. So I am still down about 10% on the year, but since I made 700% last year, it's like, you got to kind of have to roll with it. I still think, though, that I could end this year being up 100%, which would be pretty remarkable and should put me close to that $6.5 million target that I was looking for my low balance in 2025. So hopefully that is achieved before the end of the year. Real quickly, I do want to go back over here. So we talked about the inflation data coming tomorrow. Michael Arrowout, I don't know how to say that. He's got to be located in Germany. He talks about it all the time. Anyway, he's referencing Europe in here. He says this is the U.S. and European equity returns, and it shows the difference since the 2008 financial crisis, and then also too how things performed from the 90s on. This is a very interesting thing. So you can see how the European stock market and the S&P actually traded very much in line with each other, which was fascinating. And then after the great financial crisis, they've drastically underperformed. And he's saying that it's a lack of innovation and regulation that are causing these problems. I don't know Germany too well, but I would have to agree. Watching all the problems that Elon Musk experienced with Tesla and just trying to get the German factory open, it was insane. And it was like a prime example of why China can just push through anything. The United States takes a little bit longer because of regulation. Europe, it could take the rest of your life. So it's just not a good situation. All right, Kyle, hey, thanks for joining, man. I saw somebody else, Solana something up here. Solana Sainer, thank you for joining too. Appreciate you guys. You're very kind. I will try and get through all of the items on the list here today. All right, so let's go back here. So that's interesting. So there's this underperformance. I do believe that those are key parts of it. Yeah, I think that's the primary reason. We also have this environment now where the money printer go burr, so it's probably also disadvantaging Europe and many other nations across the world. No, in fact, that's probably maybe even a bigger part of this. Let me back up. So I do agree with Michael. He is right. He is right real quickly about the overregulation and that lack of innovation, but I will make a different argument. I'll say that after 2008, the money printer started to go burr at a rate that we hadn't seen in modern history. And ever since, it's been going burr. And the last 4 years were a really great representation of the burriness. And so I think it's the money printer going burr that's the primary driver right now. And they don't have it. They're not the world reserve currency. They used to be. I mean, the UK used to be a very long time ago, right? But that's long gone. So I think that it's the money printer going burr. That's what's doing it. Steve, thank you for joining too, man. So I take that back. That's what I think. Going up. So you get to see in real time how I can change my mind. The S&P. So K Kim, this dude's smart. He says the SPY. Oh my God, not this again. And he's just showing in this, and oh my God, for the life of me, I don't remember which indicator it is. It was a good one. I know that. I don't remember which one it was, and he doesn't seem to have it labeled, but it's basically a bottoming indicator, and it was showing incredibly overextended, and just like before, he's saying we're in a trade range. In the trade range, when we're in this trade range, we go up, and I agree with that. I think that's exactly what's happening. If I can figure out what indicator that is, I'll add it onto this post and bring it up to the top after I get done here. All right. Oh yeah, Marty Party responded to this. We had a little back and forth. So he was talking about. He said Jerome Powell just testified live that when inflation is back to 2%, the housing market will return to pre-pandemic levels. He called a real estate pullback to be pre-pandemic levels. Here's an average home in the U.S. from Zillow, $700K to $450K is a 40% dump. So he's saying that, hey, the housing market, if we go back to pre-pandemic levels, we're going to see a 40% dump in the price of homes. And that's what Powell was saying. I said I think Powell was referencing liquidity and sales, not price. But I still agree that the money printer will go burr. There's no choice until we can get growth to outpace the debts, which can happen if rate cuts start coming. Because again, it says it in here, interest rates on debt right now for the federal government are our biggest line item, bigger than defense, bigger than Medicare, Medicaid, Social Security, all these things. So it's a big deal, and you can fix that problem really well by lowering interest rates. So I was saying that, and I don't know how much more. Let me see what else. I think he posted something down here. Said things were for. Oh yeah. I said I'd argue that higher rates have contributed to roughly half of the problem with housing affordability. So I'm arguing that it's not just the fact that the price of homes went up because of inflation, all the money printing, and just flooding into the asset class. But I'm saying part of it too is in regard to rates, because higher rates mean that you're paying compounded deductions of interest against this investment over a period of 30 years or whatever. So that's a contributing factor too. So either way, though, it doesn't matter. We both feel the same way. The money printer is going burr, and we both say that in here. What else we got here? Oh yeah, I already talked about this. Lynn Alden said, oh yeah, you know what? This is interesting, but I don't know if it's enough to matter in here. Let me see if there's anything else I care about. Oh yeah, easing too little, too late, unduly weaken the economy. Yeah, so again, just a lot of talk about easing potentially sooner than later. More talk than we've heard in previous ones. Here's another one too. Fed Powell says inflation is not the only risk we face. So he's worried about, I don't know, deflation all of a sudden. It's not the only risk anymore, right? Threats of war, there's risks out there. So, but he's saying not the only risk. What he's saying is maybe inflation isn't the primary story anymore. That's my take. He also said more good data would boost confidence on inflation. And he said that multiple times. And he's just saying just a little more data letting us know the picture on inflation. I don't know if he said a little more, but that's what I'm implying. And he also said the labor market is strong but not overheated. I mean, same jargon, just a little bit softer. I don't think there's much else from the macro perspective that I care about. I mean, a lot of this, some of that we went over yesterday. Let me see. Yeah, no, we're good. That's enough. We're moving on from that subject. Next, to Bitcoin. So I said I'm pretty sure we're bottoming, and let's see where's Bitcoin right now after hours. 52.44. I could actually see us maybe trade down here. Here's what I think. Here's what I think happens with Bitcoin. I think potentially we see this right, like here, maybe like this. I'm just gonna put this here. I think we see this. I think we see Bitcoin trade down into what is a bull flag. So we have this, we have a bull flag, or we have a bear flag. It breaks down. Now it starts to trend this way into a bull flag, and then we go up. I think that's what's going to happen. So I think it could take days, maybe a week, and then we go up. That's kind of what I'm planning for, at least. Now, so in here, my friend Tautilus said, and I think he's Spanish. I don't think English is his primary language, just from some previous interaction, if I'm remembering correctly. But he said MicroStrategy's 4-hour price is above the 200 exponential moving average, not the moving average, but the exponential one. And if you look here historically, it tends to trend in that range, at least if we go back, a ways here, a few months. You can see that it trends in that range, and then it breaks out and it goes to the upside. And I was arguing, too, that I actually think that Bitcoin could, just like based upon what I showed you in this chart, break higher, and that this would, back up his chart, or his chart backs up my thought on that. All right, Income Sharks, my boy. I love this guy. When other people were over here screaming that Bitcoin was just going to bounce straight higher, I think I was one of them, at least for a while. He was saying, no, we're doing this, we're trading down, and then what he's saying here, what he represents here, is he's showing you this previous support zone way back here in 2023, and then another one here, and then we've broken underneath of it. And what he's saying here is that this breakdown underneath of it, generally with Bitcoin, it might even be 100% in a bull cycle. When you've got such a long time frame like this, and you break underneath of it and just sit underneath of it, it's just consolidating to rocket higher. I think that's what Income Sharks is talking about. If you're watching, dude, please confirm. Yeah. Okay. So Kristen Smith, I think she's actually, she's like a blockchain. Yeah. Blockchain. She's a part of the Blockchain Association. She said today's round table led by Rep. Rakahana, who is from California, Silicon Valley, California. Love that. So probably a Democrat. I don't know. I'll have to look. But he said led by him with crypto leaders, maybe not. White House reps have a thoughtful step forward in D.C. Key points I shared: crypto voter is real, crypto advocate is active, and the crypto industry is mature. It's working. Let's keep the momentum going. She's saying that meeting went really well, and I would agree too. I think that if you're young and in politics, you're pro-Bitcoin, and we're going to see a lot more of that. And that vote is real. I know it's real for me. How many of you guys is it real for? Would you guys vote based upon who supports Bitcoin, who supports Tesla? I know I would. All right, Crypto Rover. The spot Ethereum ETF will launch within 5 days. Get ready now. I think he's right. I don't think anybody's paying attention to this. This is why I bought some Ethereum or ETH today, the Ethereum Grayscale Trust. I think people aren't paying attention, and I think it could be a really positive narrative shift if we have that good inflation data, and that allows markets to push forth. Then I think this could be at the forefront of that. So maybe I buy a little bit more tomorrow, depending upon how things go, if Tesla keeps going up. Walter Bloomberg, Goldman Sachs to launch 3 tokenization projects by end of year, says digital assets chief. Now, again, this is just one of those things. I think this probably helps with the Ethereum narrative too, about the timing of this throughout the end of the year. But this is just, again, Goldman Sachs is talking about tokenization projects. The world is changing really quickly. Bitcoin Archive said just-in Bitcoin ETFs have taken $654 million in the last 3 trading days. That is not including today. That's through the last several days. It's a really positive trend, though, and this is one that I like to see. It's where, idiots, and idiots, I guess, can be countries, because look at Germany, are selling Bitcoin and dumping into the market. And while they're doing that, smart people with money are buying it up. So they're buying it up with their investment accounts. And you're going to see more of that. And I think you'll see pensions tying into it. You're going to see all kinds of stuff. My buddy Dax, he's a good Aussie. I think he lives in Florida right now. He's a friend of mine that I met a long time ago. We've been in this market for a while. Anyway, he said that's a few thousand BTC they've sent to exchanges this morning. He's talking about Germany. They still have 13,000 Bitcoin to go as well. Hopefully, in the next few days, they'll be depleted and we can move up. Could easily see another swing low. Then it's the bottom. They run out of BTC dump the markets and we sling shot higher. I do agree with this. I agree with this thesis totally. The city of Santa Monica voted unanimously to open an official Bitcoin office. I don't know what the fuck that means, but I like it. Ethy for Meethy. You guys are awesome. All right. Bitcoin Magazine. First off, this is the hottest presidential candidate I have ever seen in my fucking life. And if there's women in here, I do apologize. Just give me a moment. Like, whoa. And you know what's crazy? She could be smarter than Biden and Trump. It's possible. So, Suriname, yes, that's a country. This Maya Parbo, I'm probably not saying that right, says she's inspired to run for president because El Salvador's Nayib Bukele is pro-Bitcoin. And you're seeing another country looking at what's happening there and saying, we want to follow that. So, you know what? She might actually be smarter than those guys. And she's hot. So, like, what's not to love there? Anyway, all right, I'm done now. Simply Bitcoin. This is Jeff Booth. He is like a hero of mine.
Just keep saying.
I don't agree with everything he says, but I love him. Natalie Brunell is also amazing. She came from nowhere a few years ago, last cycle, and has turned into like one of the it people for interviews for Bitcoin-related subjects. But Jeff Booth is the same guy that wrote The Price of Tomorrow that I've talked about a few times on here. And he has some thoughts about Bitcoin and its implied value based upon the global balance sheet. So I just want you to hear this. It's pretty fascinating, and then I'll give my thoughts.
Saying like over and over and over again, the natural state of the free market is deflation. And once you understand that, then you understand everything else is stopping it. And if you think your prices are going up, and if you think this politician and this is going to be growth, like listen to politicians talk about growth today. They're talking about their productivity growth is faster deflation. So what they're actually talking about is we're going to manipulate money faster to steal more money from you. Mm-hmm. They're not talking about growth at all. So just keep going. The natural state of the free market is deflation. Then everything that stops it is not a political system. It's not an economic system. It's a control system. And it's so critical. Now why that's important in AI is as AI moves faster and faster, which it inevitably will, exponentially, and it merges with robots that can do anything that you can do way better, faster. The business that hires that brings in robots that you say you won't use because they're removing labor, you will use because it's cheaper for you. You will use it. And if a business doesn't use that, they will go broke because you will choose differently. So if your choices are driving this to lower and lower prices, shouldn't you benefit in an economic system that is repricing that and sharing that abundance with all people on earth? That's what Bitcoin is doing. So Bitcoin is, and if you just took kind of $900 trillion balance sheet, which is the world's balance sheet today, and there's 21 million Bitcoin, then the implied value, as long as it stays decentralized and secure, of Bitcoin is about $43 million per Bitcoin today. But that $900 trillion, because you just 900 trillion divided by 21 million, all it has to do is stay decentralized and secure for in time that to be true. It's repricing the other system. But $900 trillion balance sheet today has $400 trillion of debt against it. And that debt is already insolvent. And if it was actually marked to market, the balance sheet of the world wouldn't be 900 trillion. You'd have a cascading collapse. All real estate prices, banks would fail, everything would collapse. Mm-hmm. So the only reason it's 900 trillion, essentially what you're measuring the world through, and you're part of that ledger, the only reason it's 900 trillion is because you think the debt is solvent, and you will vote for somebody who manipulates money instead of allowing a collapse. What does that mean? That means probably 4 or 5 years from now, the $900 trillion balance sheet won't be 900 trillion. It'll be 2 quadrillion. And then if Bitcoin versus that balance sheet and the cost of living from there was 90 million terminal value of Bitcoin, it would be the same purchasing power, right? But the more important part is what I'll say here. Prices fall forever. So relative to Bitcoin, your $43 million purchasing power in terminal value today buys more and more forever, because prices will fall relative to it forever.
All right, I'm going to interject here really quick because this is kind of heavy. Essentially, what he's saying is the system is completely and utterly broken. The derivatives market is fucking insane. That's where he's getting this $900 trillion global balance sheet. And it's Fugazi, and we know everybody knows it's Fugazi, and it's broken. But at the same time, we have to run it out, right? Like otherwise, it doesn't work for the entire world right now, and based upon how our economic systems are intertwined. So since we know it's broken, we have to keep voting people into power, and they'll eventually just come down these paths where they have to spend more and more money to be able to keep pushing this system along because. Frankly, at a world level, it's just gone too far not to break in some way. Doesn't have to happen right now, though. But since you have to keep pushing this ball forward, it's gathering shit on the way and getting bigger and bigger and bigger. And eventually it will need to rupture. And when you have a system like Bitcoin where it's immutable and it's unconfiscatable and no one government can control it, and if one government does reject it, then other ones will pick up the gauntlet and run with it because they have financial incentive to, right? Like the system rewards them. And the more the money printers go all around the world, the bigger and greater that reward will become. And so it's again, Bitcoin is an infinite money printer because the system is built on printing money infinitely. And every year that goes by, it's got to be a bigger number than the last, at least on average. Now, we can lower rates. That can help us for years. If the economy is still strong enough and if jobs are going well and if we're not seeing a downward spiral like China's seeing, we could go on and on and on while they suffer. They could go through a Great Depression. I don't think that's impossible. I think it's probably where they're headed. And I think the world is reorganizing away from them to try and avoid it. But I've said this before. I think that actually, sorry, this is pretty deep, but that actually benefits all these other countries in Asia and everybody that's working with each other now, creating all these interconnections with each other to benefit each other while getting away from China. And in some cases, offering much cheaper labor now because China's labor market had become a lot more expensive than places like Vietnam, the Philippines, and many other places in the middle and the South China Sea. So I don't know. The system's broken. Some countries are going to suffer a lot. It can go for a long time still. And while it's going for a long time, what Jeff is trying to tell you is you can make a shit ton of money off of Bitcoin, or you can watch your money go away at an ever-increasing pace.
So as a general case, if you just say, how much do I own of the ledger, the 900 trillion today, and make sure you own at least that in Bitcoin. And then as you start to understand this more, you start to understand what's happening, start to move some of your time from the system that's co-opting your attention to the system that's uniting people and building to truth, hope, and abundance. And you'll find yourself more happier as you do that because it's consistent where we are going as a society. Just keep saying.
You can get rich and you can make the world a better place. I just don't know what else to say. I've been screaming for years that people need to buy Bitcoin. And I just want to see them do it. Now, this is an important one. The Bitcoin therapist says this is what the gold standard gave us. Kind of. Imagine life on a Bitcoin standard. So, yeah, so kind of, right? Like we had metals, we had forms of currency, we used to build things to be great. The problem is we can't do this anymore. You know why we can't do this anymore? It's completely unaffordable to do this. You can't. We've printed so much fucking money over time that you see these old homes. You see these old homes and beautiful things that exist that just have to get torn down instead of renovated because they're just not worth it from a maintenance standpoint because things have been devalued so much over this long period of time that it just becomes a teardown. That's the world we live in now, and it's getting worse all the time, right? Where things like you want to make them cheap and you don't, and we don't want that in society. We want our society to progress. We want to be able to afford to take care of the things that are beautiful that we've built, that end up getting torn down. Don't get me wrong, I love innovation and building new things and all this stuff, but it's a shame when we have to just let things fall apart because it's literally too expensive to fix them. That's not the world we want to live in. We want to live in a world of abundance where our money isn't stolen from us year after year, not just in taxes. That's just what they show you, right? I'm talking about the 8% a year that they've been stealing for in inflationary terms since the pandemic. That's impactful to your balance sheet. And if you don't have assets and you just got money, or you're just living paycheck to paycheck, you're just getting fucked. Everything's costing more money, and you're not getting into any of the benefit of that. So we need this again in our future. Yeah, I think that's it for Bitcoin. We already talked about this. Let's look at the CME Fed Watch. Sorry, I'm a little ranty today. Jesse, thank you for the videos. My portfolio is up 50% in 3 months based on your Tesla calls. Keep up the good work, legend. Thank you, man. Master the game. Maya, the surname president candidate, is very smart. That's cool. I'm glad they are, man. Or she is, because she's hot. That just makes it cooler. All right, 73.3%. That's the odds of us getting, so slightly lower than we were talking about on Monday, maybe by a couple of percent, but slightly lower of a chance of at least a 25 bip. It looks like a one cut in September, which is roughly eight weeks from now. I think we're getting closer to. Sorry, 9 weeks from now. So I think that's definitely going to be the first cut. That's kind of what we're looking at. I don't see anything changing that. I think it's kind of getting set in stone. All right, the fear and greed. Let's look at it. Are we greedy? Wow, we're not really, right? Like we're just above neutral. It can get much greedier. Much greedier. We'll see what plays out. But I mean, even looking over here into last year, this thing was in the 80s, right? So we can get a lot greedier than we are right now. We can get up to here pretty easy. So, and I think if anything, if we have a blow up, it's probably going to go back and forth and just really grind up into here. It might even hit 100. Who the fuck knows? All right, what do we got here? Crypto Fear and Greed Index. That's the thing. So this one shows that we're still down. We've been consolidating down here for a while. I mean, we've been down in this range for, I don't know, most of this month. But we're kind of in the depths of despair, and everybody seems to think that we're going to drop. And that's kind of what I love. Those are the times I get excited about, honestly. Let's see. What does it look like over here for inventory for Tesla? We're going to jump into that now. A little bit of spike. Got a little spike here across the board. We'll see what that ends up being. All right, let's hop over here. So Elon, in a tweet today, said that the Gen 3 version, or the 4th generation, because I guess Bumblebee didn't count here, but is going to be out by the end of this year. I just think that's amazing. Look at this pace of innovation from when they first prototyped with Bumblebee to Optimus Gen 1 to Optimus Gen 2. I can't wait to see the videos on what Gen 3 can do. This is coming a lot quicker than people realize. This isn't like vaporware, guys. This is fucking real, and it's right in front of us. So, pretty, and he says, oh, here's his exact quote: "The new Optimus design, which will be complete later this year, is something special." When Elon says that, I tend to believe him. Holmar's catalog says, after spending 7 hours on full self-driving today, I have to say it's the closest thing I've ever experienced in this world to magic. Kind of seems like a big deal. Elon said 12.5x will finally combine the city and highway software stacks. So this next one, the 12.5 version, will finally have those combined. I want to see that too. I'm really interested to see how it handles, because these are totally separate coding stacks. Somebody had this video. The guy basically got hit at like 50, 60 miles an hour in his Tesla Model Y. Or I'm sorry, 60 to 70 miles. You could see it in the video. He was parked on the side of the road. I don't know why. I didn't dig into this. If you guys know, throw it in chat. But this car basically collided into him at 60 to 70 miles an hour on the interstate, with him at a dead stop, sitting off the road on the corner. And the thing just I don't know if the person had a stroke or whatever, the old person, but they just fucking smoked him going highway speed. And he lived and was fine. Teslas are the safest fucking vehicles you could ever own. The Cybertruck is even more of a tank. If you want to be in a car where your family is safe and you know your loved ones are good, it should be a Tesla. It should be a Tesla. I won't let my family be in anything else. All right, Nick Cruz posted here too. He said the Tesla Model 3 long-range all-wheel drive is in a league of its own. So this is the new Highland edition. It's got cooled seats. It's got an extra screen in the back. It does 0 to 60 as fast as by some like Ferraris. It's fucking sick as shit, right? It's under 40 grand after the $7,500 tax credit. They show you the Polestar 2, quite a bit more, $16K more. They show you the BMW, what the fuck, $22,000 more. They show you the Hyundai Ioniq, ugly car. I'm not even going to quantify that. And then they show you a Toyota Prius, which I'm going to argue this thing is slow as fuck. Could be a hybrid. I don't even know. So the only thing that's even close to it is like some shitty fucking Prius. Or you can drive the thing where you could race maybe a Corvette. Yeah. Which one do you think is going to sell? You guys tell me. I'm not very good with math. But if you own like, I don't know, like a BMW or a Mercedes or one of these other cars where you spend, $120,000, $30,000 for something that's like a Model fucking 3 in performance, which one are you going to buy? Is it going to be the Prius? Or is it going to be the one that costs you like 40% of what you've been paying, maybe 30%, and you get a better car that's safer, where you don't have to worry about your family dying in a car accident? I don't know. You guys tell me. All right, Felix Hammer said VW puts Audi plant on chopping block. Says VW cuts or weighs first ever car plant closing in Europe to cut costs. So this is a sign of what will come in the future. And this is going to happen to Legacy Auto in the United States. I hate this because I don't want it to be this way, but I think most of Legacy Auto is going to go away. I wish that wasn't true, but I think that's the way they're heading. That's the way they're heading because they're pulling back from EVs, and there's only one company that's really doing anything about it. Maybe two if you include Rivian, and that's just because they keep getting bailed out. They can't even make a profitable car. All right. I wrote, I love it when they chase. This is from the son of Waki. I love this guy. He's really cool. Like he bought right at the extreme top of Tesla, and yet he has been such an awesome fucking advocate for this company all the way down in its price action. And even though he bought at the worst fucking possible time, he's probably one of the best representatives. Sure beats some other people out there in the Tesla community that I shall not name. But I like this. It says Goldman Sachs raises Tesla price target to 248 from 175. Well, it was 175. Maybe they raised their target because it was at 260. I don't fucking know. But this is what happens. And then when analysts raise targets, other analysts raise targets, and then they raise more targets, and they're all playing catch up, and you got too many people shorting. Hedge funds overexposed to this. And hedge funds tend to dial in and lean against pressure a lot of the time until they eventually give up. So, I don't know. I think this is probably good. It's probably going to see more of it. I put, that's a hell of a return on his Tesla severance. Smart man. This guy got fired from Tesla. And he took all of the money he got from his layoff and he bought fucking Tesla. That shows what kind of company this is. And how much people believe in it. Even after they've emotionally been removed from the situation, they still want to own Tesla stock because they know who this company is. So I can't think of anything. I'll take this over a CEO buying a small amount of shares any day of the week. This is the sign of a company you invest in. This is something negative. So Charlie Bilello said wholesale used car prices are now at their lowest levels since March of 21, down 24% from the peak. Should lead to continued declines in retail prices in the coming months ahead, and he shows his blog. So I actually do agree. I think prices in the used car market are dragging down hard. I think that's going to make it really hard to sell new cars. I watch all these like car dealership guy and a bunch of other channels on YouTube, and have been following the auto market a lot along with real estate. And everything I'm seeing is that there's just autos sitting around forever. In some cases, hundreds of days, 500 days or more in some cases, in extreme cases. And this is horrible when you have new models of like an F-150 that for 2022, 2023, 2024, all sitting on the lot with no miles. Shit's going to get weird. And so I do think that this could put downward pressure on Tesla. But the thing I want people to realize is I'm factoring that in already. I expect this to happen. I expect more pressure to be on the auto sector, but I expect people to, again, look back at what, no, let me go back here. Look back at what these cars can do, how much they cost, the full self-driving, especially as close as we're getting on all of this right now. I think that there's a really great chance that that we're going to see things continue to excel, especially with energy, especially with all these other parts of the business that benefit. Because energy, again, lithium prices continue to drop, and as they're dropping, the benefactors of that are going to be companies like Tesla and all these other, not just the lithium, but the battery manufacturers themselves. You got to realize a bunch of these guys had contracts with GM, with Ford, and they're all having to back out or reduce the amount that they're putting towards that because they just don't have guaranteed supply chains. And they're realizing that these guys are more talk than action because they just can't figure out how to make a vehicle that is affordable and that they can profit off of. So again, we're just going to see more death in this sector. And this is reiterated here too by this post from AJ talking about GM and their joint venture partnerships year over year and how they're performing, and they're just getting abysmal. I mean, they were making tons of money before, and that's dwindling away, and it's going to continue to drop. You're going to see more and more of this where it just continues to go down. All right, I'm sure there's more to talk about with Tesla, but I'm probably going to take a break on that subject right now. We're going to jump back real quickly and just look at, so we looked at the S&P and we saw record numbers. We got over 5,600 with ease off of that. And I was talking yesterday about this volume shelf here and how we were probably going to launch off of it and try and test, maybe the 5,670 range. I still think that's happening. S&P up 1% on the day. NASDAQ up 1.09%. So this did really well as well. Don't do that to me. You come back here. And as you can see, we got some room here. I think we could do 21.2 right around there before we start to see some more resistance. Now the NASDAQ is greatly outperformed. If you look here from the bottom, I've got the .618 that I was talking about, potentially the S&P taking a breather on. You can see the NASDAQ already did all that. It did that back in March, broke down, and has been taking off. So is the NASDAQ a precursor, or is it the first to fall here in the future? I don't know, but it's still doing really good, and it's definitely been outperforming the S&P a lot. All right, let me go to the Russell real quick and get the Russell 2000 and the small caps in. So I think, and I'll say it again, I could be proven wrong for a while, but I think now that people are starting to mentally prepare for rate cuts in September, we could see a run and small caps. And again, this could feed the whole market, especially if we get that good inflation data tomorrow and good data too on Friday from the rest of it. But I think we could see this really start to take off. And if I'm right, then we've got roughly another 41% to go on small caps. And that could make some of these scream, guys. Some of these tiny ones like Flux and others, people in ARCG and things like that, they could just scream higher from that move. All right, the dollar. Dollar was weaker today, 0.1%. Again, it's just kind of trading around in this range. And I said it's going to be range bound for a long time, and that appears to be true. Gold. Gold. Is it still at 22%? I guess I didn't say this last time. Oh, I'm sorry, 23% in 13 or 14 years, whatever it is. I don't remember. I don't care. So, yeah, gold's still kind of doing a thing, something. It's like a shitty version of Bitcoin. Oil. And don't get me wrong, I might eventually buy some gold. Just not now. All right, so oil, again, we know that this is like this previous support zone, broke underneath of it hard, turned it into resistance, couldn't get back up to it again, got up to it, rolled back over. To me, this looks like a left shoulder, a head, and a right shoulder that's forming right now. What I would look for is maybe a tapering off right where we are, and then a rollover down into the 80 range. If we do that, I think, again, maybe we get back into the 70s again and test down, and eventually start to establish, enough divergence to go higher. But I think we could be range bound in oil for a while. I think that's perfectly fine. The MOVE index. I think the MOVE index is better than it was. So I was talking before the last time here about how I wanted it to break under this line. I didn't get the right color of red. How I wanted it to break underneath this because it was sitting right above it. But we had this tweezer top. And just like we'd had this tweezer bottom, I was hoping that we would see another breakdown. We do appear to be getting that. So we got some chop in here. I think we could chop in this range in the 90s for a while and just hang out. I don't think it has to be a drastic collapse like a head and shoulders would indicate. I don't think it has to be that. Let's check out the 2-year. The 2-year bond market. I've said I think this thing's going to roll over. I still think that. We haven't hit the 100 yet, but I think we're going to be dropping. It's just going to be slow. The 2-year, 10-year inversion. Again, like I said before, I don't want to see it go up. I want to see it hit resistance from these previous years where it was resistance or shitty support. I want to see this, and I want to see it maybe try and roll over and just kind of hang out around here. Maybe it does like a W bottom like this. And then we go higher. Or even like a cup, it could go here. This might make sense. Like maybe it does this over between now and the beginning of 2025. Maybe that's what happens, and then it starts to break up into the latter part of 2026. That's kind of what I think would happen. Let's check the yen just to see how it's doing against the dollar. Oh, it's getting weaker. It's getting weaker. It's in the 80s, 1986. Ooh, such a good year. How old was I? Not very. I wasn't even a teenager. All right. Seeing Chinese yuan. I was saying that I think this is an ascending triangle, and I think we're going to continue to break up. So the yuan is weakening. So the yen is weakening, the yuan is weakening. That's interesting. See how the Russian ruble is. It's so fucking detached from reality anymore. Why do I even put this one up here? Put-call ratio. The puts are maybe getting a little more interested here. We'll see if that holds. All right. So let me see. Did I go enough over Tesla? I feel like, I did. I feel like I did. So again, we got peak volumes over here. We're getting oversold. Or overbought, I'm sorry, on the RSI and the weekly. Like pretty deeply into it. Or starting to. And I think though this is good support in this range, so I wouldn't expect anything under the upper 230s at the worst case if we do a retest. Maybe it's like in the 250s or 240s, and we grind in here. Maybe we grind this way, and then we start breaking out again towards Q4 or something. That could happen. I would be prepared for that mentally. That's why I've sold all my original principal in it, is because I think that that's a possibility. And right now we're only down 35% from where we were 3 years ago. So it's already done pretty good. I do think, though, over the short term, I still think there's a decent chance of going to 289 and maybe, like, I don't know, a 5% chance or something of going to the 380s between, like, now and early Q4 or something. I think that's pretty optimistic, but you never know because it overshoots. It does it. That's just the way it works. All right, let's move on. I think my viewer counter is still broken, but whatever. PayPal. Real quickly here. And I probably will go over miners here too. I know people are getting their panties in a bunch about them because they lack patience, and I get it. I've been there. Anyway, PayPal. So PayPal, I've said this before. We are finding support on PayPal. This trend over here went back a long ways. Look at this. In August of 2022, touching it again, touching it, trying to break through, dropping down, breaking up, trying to find support, breaking up, can't do it, break down, still finding support. We are very much respecting the trend line, technical support on this chart. It is a very positive sign, in my opinion. And you can see volumes. The highest peak ever in volumes is underneath of us now, as the oscillators are slowing down on PayPal. So I do like my January 2026 play. I think it's a 95 strike on this one. I think it's a pretty decent asymmetric bet. And here, we could just look real quick. Let me just look and see what it is. I don't remember my exact count in here, but I could probably look that up too. 95 strike. You know, I should probably just go off the price here. I should go off the price here. That'll be better. All right, so I'm going to put like 135, and I'll show the marks here in a second. So let's see. If we had 108,000 in, that's not too crazy far from where I was at. And PayPal by next April, by some miracle, gets up into the 93 range, then you're getting like a 340% return, 300% return off of a roughly 70% return. So that's the multiplier that I tell people about. Like, I love it when I have like a 4 or 5x multiplier, preferably at least 3 to the underlying asset. So like if PayPal by some miracle got up to, you know, by June of next year, got up to $135, I would have $1.2 million from $108,000 in cost, right? Like that's the kind of return you want to get on an investment, where you get 129% return in the underlying. You still got time left on it, like a lot, and you made 1,100% on the investment. Those are the things I like investing in. And when I see the technicals that I'm seeing right now on PayPal, and don't get me wrong, my 2025s are down like 95% from where they were. I've lost about $350,000 on PayPal, I think, right now for January 2025 contracts. I think I'll make all of that back and then make a profit on PayPal before, you know, my 2026s kick in. But and this is a small part of my portfolio. It's like a couple percent. So whatever. But yeah, so I think there's a huge opportunity here, and that's what I'm paying attention to. Robinhood down 1.24%. Seems like it's consolidating. I don't know. It's going to go where Bitcoin goes, and I think Bitcoin could go up. If it doesn't go up and we just do that trend down for a couple of weeks, then, you know, Hood could break down a little bit more. And then maybe it's a good buying opportunity. I don't know. I'm out of the calls on that one, and I have just a very small position. I think it's just thousands of dollars. It's like not a big number. SoFi today, up almost 3%. You got to give that some credit. That's pretty fucking awesome. Still down 76 from its high in January of 2021, a long-ass time ago. But this does look like a consolidation and a bounce zone, just like I was showing on the other stuff. If we look here, I mean, that looks like it was turning the .382 into support. And if we can... And this probably, I just need to redraw this. It doesn't look clean anymore. It's been violated too many times. It's fun saying that. All right, let me see here. Let's just do it like this. So you can kind of see what I'm doing here, right? You can see where there's these touch points. Here, support. Here, support. Here, resistance. Here, resistance. Solid breakthrough. Here, support. Doesn't even make it back down to support. Now, if you draw this way, a little bit tighter on the back end, and then maybe shorter on the front, you could say something like, you could maybe make the argument this has happened, but either way, this looks like a strongly respected zone that's going to spring higher from this and a lot of other levels. Let me save this real quick. So I like SoFi here, actually. I don't really own much. But just like Palantir going up, I mean, just because I don't own it doesn't mean it can't happen. All right, down 77% roughly on Square. I think this is one where I might be interested in an options contract. If I do make the decision to do that, I'll try and make a video here too and explaining my thesis behind it. But I love that peak volumes is right underneath of us, and I love that we're still kind of grinding in this 2.236 range. I think this thing wants to break a lot higher. I'm going to shrink this down because I don't think it's as important of a line. But yeah, this is a nice little trade range. It's a descending, broadening wedge, and it should break higher. And I think we could get to 88 in pretty short order, which is like what, 20-something% increase. I'll have to redraw some of these charts. No, it's like 38%. That's a hell of a move. So this one might be getting interesting. I need to look at that one closer. All right, let's see what else we got here. Oh, my daughter and her cousins seem to be here, so it could get loud. 1 second. Palantir, what a great day. Up 4% on the day, continuing to run. I think it can make it to the 30 range. I think the 30 is going to be the real deciding factor. Can we stay there, or do we turn this last amount of resistance and reject off of it? Because this thing has been rising for a while. Not like a major breakout, but just a grind higher. So, I don't know. We've got some divergences on here towards the downside. This is just a 3-day, so it's not a great example. But I don't know. If I made a bunch of money off of this, somebody was saying earlier that I was talking about how I've just been trimming off my Tesla position, and then I've been buying Bitcoin related investments and other things like, that I like, that you guys hear me talking about all the time. And he said that he was maybe going to do some of that with his Palantir. I don't think that's a dumb idea. Palantir has done really good. Hood, if you have time. Thanks, Jesse. I did that one. I think I just did that one. So just like go back just a hair and you will see it. ARCG. So again, I think we're just grinding along the support zone. If I look over here, you can kind of see how this has played out throughout time. We tried to break above this, couldn't do it, broke down really hard. Broke up, found support, broke up, rejected, broke underneath for the first time in a while, since over here, and then got it back above and established support ever since. I think it looks very much like PayPal. And the setup is very similar too. If you guys go over, maybe this is it. Yeah, okay, cool. And the setup's very similar too. So with this one, if we had 100% increase, I don't know if this is the exact, this might be off of my data, my buys. Let me reset it. I want you guys to see what it'll be. January 2026. Let me see here. Yeah, okay. So if we see a doubling in price, like let's say between now and June, we'll just do this like we did the other one. And we get up to, it's probably closer to here. Let's say in June we get up to, the doubling, 581% is what you would gain in returns off of ARCG, off of contracts right now. So again, I think that's pretty cool. And I think ARCG in the right environment could run even more. It could get up into the 60s between now and, the January 2026 end date. And so you could make off of, that's almost a 9x. 165% return giving you, 1,368% is a lot. So I like this play too, just like I like the other one. Flux. So I found out my friend Rex did make another video about Flux the other day, and he did it here and he did it here. It seems to be turning this into a nice technical pattern. So please make more videos about Flux so I can make more money, Rex. And I'm glad I'm the one not doing them. All right, we already looked at Bitcoin. You guys saw what I thought it was going to do. It's going to cut down and then break out. Now, looking here at MicroStrategy, this is a very nice looking support. It's like all the recent price action going for the beginning of the year that's sitting underneath of us. All that peak volume is just right there, and then we've got a fib level, and then we've got a trend line support level, and we're respecting the higher ends of those. That's very bullish. To me, it indicates that if Bitcoin takes off, this thing's ready to rock. And I think 2,300 is the next level. I should say this. The recent 2,000 level will be the first, real maybe touch point. But we could break even higher and go up into the 2,300s. So I think that's very possible whenever Bitcoin decides to take off. All right, let me see here. And Mara, kind of the same thing. It's getting beat up. It's on the 200 moving average, but it's done a really good job of holding that as support. Could it break down and go to the 50? Maybe. It definitely is suffering from downside price pressures, but when this thing's ready to blast, it's got an 80% run just to get to where it was in February. So that's an almost doubling. That's a good number. So I'm pretty excited about this one. I think it's going to do good. I think I don't like this company as much as I like CleanSpark and Cypher. But I do think that they can do quite well, and their turn's going to come. It's just been AI for all the other miners. All right, let me see here. CleanSpark. Let me save this one again. CleanSpark. Same kind of thing. Getting beat up. Really, really kind of bull flagging. If we draw it like this, or like a pennant almost, this is going to be ready to break out eventually. It's going to break higher, and yeah, it's down 0.3% on the day, including after hours. I would be a buyer here. I do love that from where we're at, it's about the same, maybe a little bit less. Yeah, a little bit less. It's about 65% upside to the recent high, but still a really good number. I'm sure Cypher looks very similar. Let me pull that one up too. So again, this one was consolidating. This one actually looks like it's got the biggest flip. Like this one is ready to flip higher. It's just such a strong price action through here. And then these huge wicks over and over again indicating what it wants to do. So I think this one could get to its previous high. It's got a less to get there. But, I mean, don't discount the fact that maybe it could do this too, because it's a much smaller cap. It's only 1.3 billion, 1.37 billion. So it's 40% roughly of CleanSpark, which is 3.46 billion, and then Mara's 5.16, so it's even larger than CleanSpark. So I think Cypher could actually, I mean, it could do an 80% run in a short period of time. All right, let me look here at chat. Oh, didn't drink enough fluid. Voice is too dry just talking here the whole time. I'm gonna have to get some special guests to help run this with me. That way I can shut the fuck up every once in a while. Jason G. ZS, please. Bullish, MACD on weekly chart. All right. Let me see. Now we're going to do the stock part of this segment. All right. ZS. Is it ZS? It's ZS, right? I'm not tripping. All right. Let me just see. I think I have that one. ZS. Whoa, that ain't Z. What is happening? There we go. No, I don't. All right. Guess I'll make a copy. If I can hit the right button. All right. Yeah. Yeah, I'll talk about, I'll try and get to that one, TS, or TSLA in miners. Oh, this is Zscaler. Okay, cool. I'll try and look at that one with Iron and Wolf and give you my input. I've kind of done it before. I think that the AI play could be hyped for a while. I do see that Iron was getting its ass kicked, I think, for a little bit. I didn't see how it did today, but I know it's been getting hit just because it performed so well. But I do think these others are going to play catch up. That's how the market works. It'll reward. The only ones that it wouldn't reward are ones that are going to fail. That's literally it. All right, Zscaler, 30 billion. It didn't get moving averages or anything in here. That sucks. Peak volumes underneath of us. That's interesting. Let me just see. I don't know. I'm going to look at the fundamentals of this company because I don't have any of my other charting stuff that I want on here. ZS. Oh, there we go. All right, net income is positive for last quarter. That's cool. What are the estimates? Ooh, continued. Let's see, what's the activity? No major sales since 2019. Short interest dropping. Institutional ownership going up. What's it priced at? 64 forward PE. It's a decent price. 32% revenue growth year over year. I mean, it looks like a good company. And it's nice to see them actually making money. So if that does continue to get better, this could be all right. Oh, thanks, John, for the tip. I'll try and get to that one before I get off here. All right, so Zscalers might be something I got to take a look at. What the regions here? Where are we seeing expansion? It looks like in their base in the U.S. and maybe some in EM emerging. Okay. Huh, interesting. No, it looks like the company's headed in the right direction. I don't know how much upside that equates to. And I'll have to, let me see here. I'll see if I can at least draw something, get something created as far as like a trend-based fib extension or something. So March of 2020, we're going to call that the low. We're going to draw the high. This is the trend-based fib extension I'm doing right now. All right. So we did find support on the 236. We look like we're curling up. I would maybe think 217 would be some resistance unless they do really good and knock some shit out of the park. And then maybe we make a run to the 255 range. That's kind of what I would think for Zscaler. All right, let me see here. Yo, hey Jesse, looking forward to your views on CleanSpark Cypher, of course, Bitcoin. Austin Tan, hey Jesse, saw you started a position in BITX. I think BITU is better as its expense ratio is lower at 0.95% versus 1.95. Only drawback is the other one has less liquidity. See, liquidity is something I'm willing to pay an extra percent for, Austin. The last thing I want in a market is to not be able to exit a play when I want to and have the price get driven by it down a lot. I'll pay 1% a year for liquidity. So I'll probably stick with this one. But if you find out any more reasons, let me know. And Brian also said, hey, Jesse, Neov was recommended by a large broker, energy stock for residential. Okay. I don't think I've got that one. So let me see here. I'm going to pick a different, I'm going to do a Bitcoin, and then I'm going to copy off of this one so that I can get the stock in here. And who is this? NEOV. All right. NeoVolta. Wow, this thing's going a lot, huh? Went from penny stock. The fuck? March of 2024, this thing was 65 cents. Now it's 263. Huh. That's fascinating. May of 2020. This is kind of fucked up. I don't have like a really clean trend-based fib extension. I mean, maybe I can. I'm just gonna draw from here. That's all we got. It's got to be what the quants are doing. All right. So peak volume here underneath of us, and we got the .786, and we've been consolidating on it, and we've got the 100 moving average on the weekly time frame. I could see a run to 4. This is interesting. $87 million. It's up 8% in after hours, too. Huh. Now, let's look at their financials. Not profitable. Don't love that. Don't love that. Huh. Q2. Wow. Somebody did some buying. Not a huge... Well, I guess it's a lot. Is that 1.28 million? 1.28 million shares bought by insiders in Q2 of 2024. Huh. That's interesting. Short interest dropped. Institutional ownership dropped last quarter. But those are weird. It's kind of alluded. So institutional ownership dropped, short interest dropped, but insiders bought a lot. Huh. And then the revenue estimates are looking to trend higher. But what's the stock-based comp on this one? 22% of revenue. But again, look, they seem to be burning cash. They have no debt. But they're not making any money. Weird company, man. I mean, it looks like it could rocket to the moon. But I just don't know how to value this. I don't know. I don't know what to say here. I don't know what else you know about them, but let me know. All right, let me see. Rashab says, hey, Jesse, could you please look at Sound and GMIA? Yeah, I can do that. I'm going to save this one real quick. I think Sound is that AI play one? Yeah, SoundHound. I mean, it looks like it had a good day. It's up 26%. One could say this is a strong bottoming pattern here. If we get a bunch of hype, we could see this thing go higher. I mean, it went up 530% in a hurry. I could see 750 maybe, or testing the previous high in the 10s, which is crazy. So it could double. But I don't know anything fundamentally about this business. When I looked at them, I think before and here, I didn't see anything great. So it's literally like it's just meme stock shit as far as I can tell. Yeah, look at this. It's fucking horrible. They made in Q1 they made $11.6 million, and then they lost $33 million. I don't see anything good here. This looks like a shitty company. They're diluting shares. They're losing money, hand over fist. And anybody can make revenue, but if it's not profitable revenue, if your cash flow is negative, I don't know what it matters. I don't like this one. I don't like the selling of shares. It just seems like they're diluting shareholders and fucking them for a company that isn't a real profitable business. So I don't like that one. I don't think it's a good deal for people. GMIA. Let me pull that up here. Or JMIA. Jumia Technologies. I think I looked at this one too, maybe. So this is another one where it looked like they were trending in the right direction for net income, but then all of a sudden they're down 41 million when they only made 48. Their cash is burning away. Even their bonds, they're selling their bonds away. They did get positive cash flow for like a second. Single digit revenue growth. What is the $1.2 billion company? So it's not a huge company. But I don't know. Not a ton of growth. I don't know what to say here. Yeah, they're burning down their cash. They're doing a little bit of dilution. Maybe they're getting things. Operating expenses are coming down. I don't hate that. But this just doesn't look. I don't like either of these companies personally. Just at a glance, I don't. MB, hey Jesse, a technical question that I've tried to ask a few times. When you draw a 50 simple moving average and a 200 simple moving average lines, do you calculate those on an hourly or daily basis, and why? I generally look at them on a daily time frame. I don't like to go into hourly anything. I just don't think it provides enough value for me. There's not enough signal there. So like right here, this is the S&P. I'm on the weekly time frame, right? But I look at them on both. If you look down here, so this is the daily time frame, right? This purple one is the 50-day simple moving average. This yellow one is the 100. This brownish orange one is the 200. So it's always that way. Purple, yellow, orange. 50, 100, 200 on all my charts. And I will look at them on the daily time frame that way. I will look at them the weekly time frame that way, and I'll look at them the monthly time frame. Some that don't have enough history won't have this, right? They don't even have the 50 simple moving average because that's so many fucking months. But I look at them on multiple because there's some that moving averages, there's like active ones, right? Like right now the S&P is above all of these. On the daily time frame they're above them, on the weekly they're above them, and so these are not active time frames, right? If anything, it's probably active on the, let's see, 4 hour. Not even. Is it the hour? So it looks like here on the hourly we touched that on July 1st. So 10 days ago. So it looks like we've got at least some activity on the hourly one. I never look at it though, but that's probably like the active time frame because that's where it's actually, connecting and trying to find support and resistance is probably like the hourly to 4 hour. You can see here like the 200 moving average on the 4 hour acted as a great line of support. That's probably where you're going to see it is on the 4 hour, and it did that. And then it turned the 100 and the 50 into support, and then it just went higher. But the time frame right now that's active is probably going to be more like the 1 hour. And I don't look at that shit. I don't have time for that. I like to look out over I like to look way out and then zoom in. And that's why I'm sitting in the dailies, or at least, I'll look at the weeklies and monthlies too, because I want to see that long-term trend. And then you zoom in with shorter time frames to kind of hone in on what's going on with all the details. Hopefully that answers your question. Then can you have a look at Melee? Let me see here. Let me go over here to it. I think I have this one. Melee? Okay, there we go. Oh, is this new? Oh, nope, that's not right. Mercado Libre. That makes sense. All right, here we go. I should probably actually draw a trend-based fib extension on this one, because this one's really going to pop. So where's March 2020 over here? Let me do that. I don't know why I don't have this already. All right. This one should look... Oh, yeah, that looks real good. Look at that. Finding support above the .618 is a beautiful thing. I would expect this one to break through the 1800 range and try to go towards 2000 again. Looks to me like left shoulder, massive head. Maybe we do a right shoulder over here. I don't know. It's broadening out, but I do think we would at least test it before getting rejected. And this company, I think, has done pretty good, right? Let me see. Let me see what their PE is. I know it's pretty high. All right, 46. That's not too bad for a forward. So yeah, I would expect that 2000 range. I think that's coming. That's coming. All right, what else you got? Finally, a short thesis on John Deere. If CPI goes down, typically farmers stop investing in equipment for a while. Can you have a look at it? All right, we can take a look and see if there's a pattern there. One more thing, you did review Solar Edge for me a few weeks ago, and you mentioned check again if the rates are dropping. It seems bouncy, perhaps worth checking again. Yeah, probably not yet. Maybe in a month or something I'll look again. Not really interested right now, though. All right, Matt, if 1/3 of your portfolio was Tesla shares, and you've had them for 4 years, would you trim here? I have PTSD from last few years where price corrects. If you have options, then yes, I would trim here. If you have stock, I'd probably be patient personally. But again, I don't know what the rest of your portfolio is, and I'm not a financial advisor. These are just my thoughts of very limited information. Pete, PayPal, ARKG, while I'm still bullish on my SMH call, today I placed calls on PayPal, 100 strike, June 2026, and ARKG 50 strike, January 2026. The asymmetrical return is too hard to ignore with these if they bottomed. Yeah, no, I agree, Pete. Albert, hi, Jesse. Hope you're doing great. What are your thoughts on Anthony Noto interview? I didn't watch it. I just got highlights, so I don't know if I can speak to it yet. I do like Anthony Noto. I haven't seen anything really too innovative or interesting coming out of SoFi for most of this year, really. And then you got Hood doing so well. I think it's stealing thunder. That's kind of the way I've been. I might give it more of a shot in a while. Disease Codex, one of my Tesla calls yesterday. Rest will scale out later on. Cool. Justin said Palantir. I already did that one. Silly Bunt said Palantir has moved up so much at this point. It's time to get to just cheerlead. Yeah, I already cheerleaded when I made like 500-600% off of it. Whatever. I made 600K. I don't know how many percent that was off of it last year. So I did my cheerleading when it was at the bottom. I won't do it here. I don't cheerlead because things are near their all-time highs. I cheerlead for asymmetric bets that I think are great opportunities long-term. All right, my voice is getting rough. I am probably going to have to call it, guys. I will look at Beto, though, since John gave me a tip here. I want to make sure I honor that. I don't know why I have all these other indicators in here. Let me see. What am I doing here? I might kill that. I might kill that. Do that. Okay. Wow, this one got decimated. This isn't the short play, is it? Which one is this? ProShares Bitcoin ETF strategy. So this one was at 34. Oh no. Okay. So this is just like this is just an ETF. I don't know. Is this one like a multiplier? Is Beto a multiplier? Can you tell me that, John? Is it like leveraged? I'm guessing it isn't. I would expect it just to, if this is just a 1-to-1 for Bitcoin, it's just going to perform like Bitcoin, and I would look at the Bitcoin market instead. That's what I do. Thoughts on real estate stocks like Z once interest rates are cut? I think they could do better, but I think there might be lag. So it's a little tough to figure out timing there, Raghu. Sally Bang, hey Jesse, could you take a look at AMD short-term price target? Oh yeah, you know what? I do want to look at that real quick because that is one that interests me. I heard it was doing good again. I heard Intel might be breaking out too. Excuse me. I mean, it does look like we've found a fib here. This is a weird line. What is this? All the way back to March? Jeez. What time frame am I using here? July 15th. That's just too long. Come on, man. Let me see here. Hey, thanks for joining N01ZH. Let's at least go to 2020 or something. Jesus. It's just too far. Did you even drop in 2020? It's right there. That's insane. All right. So consolidating. Okay, so I think maybe it would try and run again to 229. 229 to 242 before deciding what it wants to do from there. And I haven't been following AMD enough to tell you much beyond that. Any concerns with SoFi or Hood with X wanting to be the everything app? I think Hood is going to do really good. For SoFi, I don't know. SoFi is like trying to be a bank, and I think X could be really displace something like that. But you got to remember the fintech sector is expanding. So theoretically, and they don't have all their licenses yet. Last I checked, X doesn't even have like 30 out of the 50. So it could be a while before X becomes like a major contender, and we could still see these companies expanding in the meantime. I worry more for SoFi just about like lending and it being a bank. Banks are functionally insolvent. They all are because of fractional reserve banking, right? They don't have any of the money. And so all of them can fail. I don't think enough people understand this. There isn't a bank that couldn't fail unless the almighty government deems that it shall not fail. Now, they've said that they won't let banks fail. So I would assume SoFi would be covered under that, but I don't know if that matters for the narrative and people's fear. So I feel like SoFi is going to take a while to do good. I'm not worried about it for Hood. I'd be more worried about it for PayPal, but I think PayPal's really pushing for that advertising narrative too, which could benefit them if they execute it well. We'll see. I think PayPal could do really well, but we'll see. It's actually just Bitcoin futures. I think it's getting hit hard, a downtrend, but rises well and upwards moves. I like it because it has options. Ah, cool. Okay. I'll have to take a look at that, John, and thank you for another tip too for the $4.99. I'll have to take a look at that, look at that market and see what it looks like and see if it's indicative and how well it tracks and all that kind of stuff. Bill B, Kava thoughts. I probably won't go over Kava right now, but we can talk later. Hey, Jesse, would you look STRL for me? Much love from Sweden. Since you just joined, I will. And I'm sorry, what the fuck? I'll do Kava too. Give me 1 second. So Carvana is a shit stock right now. You guys know how I feel about the used car market. Oh, this is Kava. Oh, no, not the same thing. All right, 9.73. Thanks again, man. Thanks again, John. All right, so let me look at Kava real quick. I don't know this company as well, so I'm just going to pull that up, and then let me take a look, and then we can dive into it more. 28%. So this one is positive. It's got a net income of 14 million. That's good. What was our revenue? 259. It's got a forward PE of 214. That's a super high number. But the company seems like it's growing in the right direction. I like the 28% year-over-year growth. Estimates look okay. Continued growth. It doesn't look crazy. It looks like they should try, like the cash flow still, you got operating cash flow and free cash flow that turned positive. So it looks like this company's doing all right. It's just a little rich too. So I don't know what it's going to do as far as stock. I could see it maybe drop more. It's ran a lot. It went from $29 up to 98 in a short order since October. So, I mean, I could see maybe something like this, like the 79 range turning into support. What I'll do is a fib-based retracement. I haven't done one of these in so long. Let me see here. No, that doesn't seem right. Let me try this. I might try it this way. No. Being super dumb here. 1 second. There we go. Now that's right. All right, so it looks like maybe we'll try and test down here to the 82 range, and again, the next target 72, next one 63. Golden retracement, if it really got shitty, would be down here at the 55, and then we would probably bounce higher and go up. This thing has run pretty good, though. It just all depends on the fundamentals. The fundamentals are going to decide their direction of this. This is the spacing in between here for any potential retracement, but it could launch too. Maybe it stops here if the fundamentals are really good and the markets are doing well. STRL. Let me pull that up. I don't think I have that one. No. Okay. Let me do a copy. Sterling infrastructure. It's kind of a steady Eddie. It's been doing well. It's went a lot. What has this done since March of 2020? $6.80 to 138. That's a hell of an increase. All right, I got to see this one. Check out fundamentals of the business sometime. Okay. All right, Sterling infrastructure. Cash positions going up, debt's going down. A little bit of share dilution, surprisingly. Cash flow was really good in previous quarters. 147 million. That's pretty good, considering. So the forward PE is 21. Not a crazy number. Seems like a growing business. If these estimates are anything like reality. They were buying their stock pretty heavily up until Q1 of 2022, and now it's just kind of mixed. But these people have made a shit ton of money. Short interest is not that high. It's around 5%. Institutional ownership has climbed a lot over the years. This is stock-based comp is low, like acceptable margins, I should say. They're not spending or paying all the bills with stock. Looks like, I mean, just on paper, this looks like a pretty decent business. So maybe it just keeps going. Let me see, where can I even start here? Because March of 2020, it was like right here. All right, let me see. I'll just do this. Let's say that was the bottom. That was the top. Yeah, this thing's already run. It's already past this. Here, we'll have to do it from here. So this thing has done really well. We're going to retrace from here. I think this will be a better point. That's like more applicable. Oh yeah, now you can see it better. All right. So what I would say here is that you can see where it got rejected off the golden retracement zone. You see where it's trying to find support on the 5. If we started to dial out here, like over the next, month or two, and we're trending right above this, maybe curling up, and we test the 130, then I would expect this to go higher and try and do 167, and just do another leg higher. I mean, look at these rejections. They're so perfect. You can see where it struggled here, but it went up, hit the .5, rejected, hit the 93 range, went back up, hit the .618, then went back here to the .5 again. It's just like a ladder. It's really pretty. It's really pretty price action. All right, I gotta go, guys. My voice is killing me. I just got a dry throat, and I got family here too and kids to play with. So I think I'm going to call it at this juncture, and we can do this again. I might do it another time this week, but if nothing else, I'll see you guys either Sunday or Monday. Monday for sure, because I do these at least Monday and Wednesday. Trying to get a third day in. We'll see if I get to it or not. But I love you guys. Thank you for supporting me, and I hope you all have a great day. Peace. Let's get a song. Let's get a good song here, guys. What do we want to listen to? I think we're going to go with this one today.
I've always been deeply opposed to crypto.
Last year, cryptocurrency funded every kind of dangerous criminal.
But I would not touch crypto in a million years.
Bitcoin is going to zero.
If I was the government, I'd close it down.
People are losing money in scams and huckster flim-flam artists.
These people who own these things should not own your money in any of those. I do think you're an idiot, okay?
It's over.
Go fuck yourself.
What do you do?
Go fuck yourself. Is that clear? I hope it is.
What do you do? What do you do?
Go fuck yourself. Is that clear?